On to what we saw in the U.S. listed shares overnight after it booked its first quarterly loss since 2012, largely due to the record $3 billion antitrust fine by the Chinese government. So Alibaba Hong Kong down 5%. The U.S. listed shares tumbled as much as 7% overnight. Let's bring in Kian Soon now. He is CEO and fund manager at Astral Asset Management, joining us from Singapore. Kian Soon, that short-lived tech sell-off and indeed the broader market sell-off, do you see this as a buy opportunity?
I think we are going to see a couple of such sell-offs coming for the tech sector. Basically, if you look at the correction, it's a minus 6% corrections for Nasdaq this month. And we're going to see a few of these, mainly because, number one, the tech stocks, some of these tech stocks valuation is way too high, and because they don't have the earnings to actually sustain such a kind of valuation. Secondly, we're going to see some kind of rotation out of tech stocks as more and more Americans are coming back to work. And the concern is whether some of these tech stocks could sustain such an earnings going forward. And last but not least, tech stock is also very sensitive to an interest rate hike. There have a lot of discussions on interest rates, basically because of inflationary concern.
What about regulatory concerns, Kian Soon? I know you can't talk about specific companies, individual companies, but when we look at how these regulators are kind of closing in on big tech companies, Alibaba's first operating loss since being a public company, there's definitely a risk there for these companies.
It definitely depends on where the high-tech companies are located and where they derive most of the business. Regulatory pressure has been building up across the world. We see that in tech giants like Google, Facebook, and those pressures happens globally in different locations. As long as these regulatory pressures and fines are not attributed mainly to one big chunk of their revenue, I think investors are more forgiving. I think for the Chinese high-tech, the concern in most of their revenue are domestic. And if the regulators in China begin to clamp down continuously on them, then it's going to be a big challenge for these high-tech players over there. So investors and market is watching whether these regulatory pressures will be one-off, or is it going to be ongoing for the next couple of years.
Kian Soon, we also have our eye on the telco sector, specifically the one in Singapore. Singtel has reported that impairment charges to be expected from its overseas subsidiaries. Telcos were expected to benefit somewhat from the pandemic plays, stay-at-home plays. To what extent has it helped their businesses? And does this depend on whether they can broaden out from their core business and look beyond their borders?
So here's an interesting piece of research that is published end of last year on the high revenue telco sectors, and it's found that telco players actually have a hit of 4 to 8% for their total revenue because of the pandemic. This is a result because data roaming, which is a very high margin business for telcos, are badly affected as a result of the pandemic. Similarly, there's a hit on the kind of people who are interested to change their handsets, as well as the business sentiment and the consumer sentiments are actually not too high at the moment. So there is a pressure on telcos' revenue earnings.
And what about the 5G trends that are expected to help their business?
So in terms of trying to benefit from this pandemic situation, I think telcos really need to reinvent themselves and offer integrated value propositions for businesses, in particular under the new norm. And this would be in terms of providing flexible services, focus on the data center, the cloud services, as well as cybersecurity. As for the consumers, I think the telcos will have to weigh in on the business case in terms of investing in 5G services. We've seen that happening for the China telcos already. But for smaller countries, it's really a case of whether the capital investments justify the telcos to make such huge investments at the current moment so that they could offer more attractive services for the consumers.
Okay, just very quickly, if you can, Kian Soon, we look at how the reopening trade seems to be well underway, particularly overnight in the U.S. But, there are risks to that trade. We take a look at India, for example, and even vaccination rollouts in parts of the world are patchy. How do you weigh this as an investor?
I think as an investor, the reopening trade is definitely attractive because this signifies a huge economic recovery as people leave their house and go back to work. And it means a lot in terms of to all the businesses that have been severely impacted. What you mentioned is definitely a second wave of concern as the virus mutation has led to what we have seen in many emerging markets that has been severely affected as a result of their hospital services being overwhelmed. In terms of positioning, I think currently we are still looking at countries or domestic economies that are strong enough to sustain itself and who has managed this pandemic very well throughout the last 2 years, because you take safety in the fact that the businesses could continue to operate and they will not be affected by continuous lockdowns that will ultimately take a huge hit on all the businesses.
Thanks very much for that, Kian Soon, Astral Asset Management. That does it for today's edition of Asia First.
Thanks for your company. We'll be back here on Monday with a lot more.
Yeah, have a great day ahead. Bye for now.